Welcome back. You're watching Breakfast with Profit right now, but we'll pick up on the other story that we are tracking here, and that's real estate. So we'll start with that and we'll get back to Reliance. An interesting day today. Later in the day, something called the RESEX, the Real Estate Sensitivity Index, is going to be launched. It's an index that's going to measure volume movements, price movements across various real estate markets in India. It's the kind of index that India hasn't had so far. So let's welcome in our guest and try and understand what exactly a realty sensitivity index can do. Joining us, a very special guest, Niranjan Hiranandani of the Hiranandani Group, and of course one of the well-known builders here in Mumbai. Mr. Hiranandani, good morning to you. Let me just first ask you about this real estate sensitivity index. You're supporting it. You're going to be one of the people launching it later today. What exactly is the idea behind this index?
Yes, the answer is yes, because the main point is you have no measurement tool as it stands today to understand what are property values as compared to what is available as far as stock values are concerned. So for instance, let us take the question of what is the stock value of Reliance today? And it has moved up. But if only Reliance has moved up, that doesn't mean that the index will up. But it depends also on how much weightage is given to the Reliance shares as compared to other shares. So in reality, if you can think that instead of having a stock market index, you have a property value index, and that is how it is sought to be measured.
All right, that's an interesting index, and it's going to be launched later today, so we won't talk much more about it. But in terms of the overall picture that it's going to paint, sir, let me just ask you about the demand scenario. There's been a sense that after that initial pent-up demand came through, it's sort of leveled out a little bit, and the festive demand has also gone out of the system. So demand is sort of slowing down a little bit from the last few months. Is that true?
No, leveling out was bound to happen. There was no question about not leveling out, because ultimately you have to understand that for almost 12 months there was no sales whatsoever. So obviously there was a pent-up demand. But let me share with you that the pent-up demand is not really over, and a large number of people are waiting to still buy properties. You talk to many, I meet people all the time, and all the time they are inquiring as to whether this is the right time to buy. Is it the right place to buy? Is it the right place to really buy? And all these people are people who want to buy homes for themselves. Forget the investors. So there is a large number of people who are actually waiting to buy properties, many of them or most of them being first-time buyers. So I don't see that the pent-up demand is over, but maybe the first burst of demand is over. But now you're going to get a steady demand from now onwards, and I think the demand has actually increased and not reduced. But the burst is gone. Yes, the first time where 15 to 20,000 apartments got sold in the Bombay region, many of the developers have sold between 100 to 1,000 apartments. I think that phase of burst has gone, but the steady demand is definitely there, and nobody should mistake it that the demand has actually fallen.
And Mr. Hiranandani, so while demand is picking up slowly and steadily, how is actually the price picture panning out? There's a general sense amongst a few people in the industry who believe that developers could have possibly raised their prices too soon.
No. I don't think that there has been any increase in prices across the board. There are segments in which and buildings in which the prices have gone up, but that is not an indication of an overall increase in prices either in the Mumbai region or countrywide. And certainly not out of Mumbai. You know, Mumbai region is definitely a much stronger buy position in terms of apartments and houses than in the other locales. But I would say even in Mumbai, I don't think the price rise is anything substantial, maybe 5 to 10% in locations, in particular buildings, in particular projects. And normally what happens, suppose there is a project of say 100 apartments and 90 is sold. Then obviously the developer will increase the price in respect of the balance 10 because he's not really in a hurry to sell. So, but if you look at the overall industry demand, and that is what I'm talking about, I do not think there has been a huge rise in prices, not even 5%.
Well, of course, sir, just to talk a little bit more about, you highlighted that there is a slow and steady pickup in cities such as Mumbai, but what's the demand and price scenario in cities in the tier 2 and tier 3 cities? Is there a pickup in demand being seen there as well?
I think basically the worst is over. In most of the tier 2, tier 3 cities also, the bottoming out has really taken place. Maybe exceptions can prove the rule, obviously. But by and large, if you see that the prices have fallen. But the demand in the tier 2, tier 3 cities is still not picked up in a manner in which it has picked up in the tier 1 cities. But my gut feel is, again, it's a gut feel, that the demand in these two, the other cities will also pick up. But it may not pick up at the rate at which is picked up in the tier 1 cities. But no doubt about it, you have to understand the countrywide demand for real estate, for homes, for housing is still huge pent-up demand. I was speaking the other day in a forum where I mentioned that I expect that in the next 1 year, in the year 2010, demand should further increase by about 30% across the board.
So that kind of demand, Mr. Hiranandani, enough to support the new project announcements that we've seen, because we've seen a spurt of those as well. Too much, too soon, would you say, or is it keeping in pace and keeping in line with the kind of demand pickup?
I think in the regions where sales has already picked up, already new projects are already being done by the developers. And look at the number of IPOs which are coming into the market. Obviously, this is backed up by many projects which are likely to come into the marketplace. So I do see a lot of new projects which are going to come up. But obviously, in the areas where demand has not picked up very fast, the new projects will come up slower. So I think there's going to be a gradual increase in sales, a gradual increase in terms of conversions. And I think overall, in the next 1 year, whether it is tier 2, tier 3, from the levels it is standing today, I think by the year 2010 end, you'll see a 30% increase in sales.
All right, Mr. Hiranandani, we've talked a lot about residential projects, and that's where a bulk of your business is. But what is the sense you're picking up from your peers on the commercial and the retail realty market? Those still seem to be lagging behind?
I do see that there is an increase in the demand for commercial real estate. It has just started picking up in the last 30 to 40 days, but it's too early to say how fast it's going to pick up. But my reading is personally that from January of 2010, commercial real estate demand will also pick up, starting from the tier 1 cities and probably then move to the tier 2 cities, maybe by August to December of 2010. But demand for commercial real estate, at least in Mumbai region, has definitely started picking up. As far as retail is concerned, I think there is still a problem. The rates, the values and rates at which rentals are taking place have fallen substantially, and there is a lot of restructuring of rental values in terms of anchor customers as well as the others. And I think maybe this will continue to go on till June of next year. So once this rationalization takes place, I think you will again see a resurgence of supply, but may not be in 2010.
All right. Thanks so much, Mr. Hiranandani. Always great to get your views on the real estate market. And of course, watch out for that realty sensitivity index. We'll be back in a couple of minutes. Get back to that RIL discussion that we were trying to get at.